Okay, hello and good evening, ladies and gentlemen. First and foremost, I would like to say thank you so much for taking the time to join us, CGS CIMB, in what we believe will be a very interesting and engaging session. Before we go any further, let me introduce myself. My name is Unkudani. I am from CGS CIMB, and I will be your moderator for today's session of Ask Me Anything. And just for your information, this is actually our second series of our Ask Me Anything session. And today we will be diving into the theme of things I wish I knew about investing in my 20s. So for your information, this Ask Me Anything session is the series that we have created in conjunction with the ASEAN Investment Challenge by CGS CIMB. All right, so we have a lineup of very great speakers that I will go about to introduce just in a bit. But before we proceed with the main chunk of this engaging session, let me just set the stage a little bit on giving everyone here a little bit of information on the ASEAN Investment Challenge 2023 by CGS CIMB. So first and foremost, what we all know that the ASEAN Investment Challenge is a trading stock simulation competition that involves the countries in the ASEAN region, Malaysia, Indonesia, Singapore, and Thailand. But most importantly, there's a bigger agenda or a bigger mission here, right? And the first one is the fact that this is actually a partnership between CGS CIMB and the Institutes of Higher Learnings in the ASEAN region, right, to strengthen financial literacy of the youth in our community, in our region. And we do that by allowing us to further the national agenda of youth development. And at the same time, it's actually very much in line with our purpose here at CGS CIMB and our mantra of helping others make better investment decisions. Also, to add to that, this program is actually a holistic program with two main key objectives. So the first one is academic learning, where we try to inform you a little bit more on financial literacy, provide you with e-learning content. As you all may know, I'm pretty sure you all have participated in the mandatory modules, but also this Ask Me Anything sessions that we're having today is part of that academic learning. We also like to provide practical exposure with industrial attachments and internships, and also allow the youth in the region a chance to be exposed to, investing and finance and trading in regards to other regions as well, your neighbors. And at the same time, it's an opportunity for all of you students here to engage with the present and upper management of CGS CIMB and also the industry experts within this region. So that is what we are doing here today. So sit back and enjoy what we have to share with you. All right. So before we get into, let me explain a little bit on how the session will work. So a ton of you have actually sent us questions leading up to this session in terms of the types of knowledge and information that you would like to know. And what we have done is we've actually collated them, right? And these are the questions that we will be asking our esteemed and awesome speakers here today. And after we have done the little moderated session there, I will then be opening up the floor to take questions live from you guys from YouTube to ask, ask our esteemed speakers here. And this is a chance for those who maybe did not get a chance to submit your questions earlier, and maybe you would like to get more information or more expansion on what's being shared here today. So I think the chat box in the YouTube channel there is live, so you can start plotting in your questions as we go along this session, and then I will then take a look, and then I will see which one would be best to be answered or asked and answered for the benefit of all of you here today. Okay, so moving on to our speakers. So today we have speakers from different countries within the region. We have from Malaysia, Malaysia, Thailand, and Singapore. So let me introduce first our Malaysian representative. Today with us from Malaysia, we have Ronnie Chai, dealer representative of the elite dealing team for CGS CIMB Securities Malaysia. Ronnie, would you like to unmute yourself and say hello to the crowd?
Oh, hello everyone. Good afternoon.
All right, good afternoon to you, Ronnie. Next up from Singapore, we have Benny Lee, who's the SGX Academy Trainer and Chief Market Strategist, Equities Tracker Holdings Berhad. Benny, how are you?
I'm doing great, Danny. Thanks so much. Hello, everyone. I'm actually a Malaysian. I'm not a Singaporean, but I'm just an SCX Academy speaker. So.
Yeah. Well, you'll be speaking on behalf of the Singapore region.
Yeah, sure, no problem.
Okay, thanks so much. Last but not least, from Thailand, we have Yospon Anandwanler, Senior Vice President, Group Investment Management of CGS CIMB Securities, Thailand. Yospon, would you like to say hello?
Hello, hi, good afternoon. Yes.
Okay, great. All right, so gentlemen, thank you so much for taking the time to join me here today, and as well as, to share your time. I'm pretty sure what we're going to dive in today is going to be very beneficial to the students watching us live here today. Okay, so let us start because, the three of you here, very, very prominent, I'm pretty sure seasoned investors, have been in the industry for quite some time. So I'm pretty sure everyone here is wondering, the first question, general, how did you guys actually start your investing journey? How was that like? Maybe we can hear from Benny first.
Yeah, Danny, I think it starts off as a FOMO, a fear of missing out. It was in just before 1997, before the Asian financial crisis, right? Where I was still in college and everyone was talking about the stock market and they've been making money so easily. So that's how it got me excited about the markets and start looking at it. Yeah, that's how it actually got started.
Okay, so fear of FOMO. Okay, so, not necessarily FOMO is a bad thing, ladies and gentlemen. You can harness that energy and turn it into something great. Let's hear from Yosman.
Actually, I started out when I graduated. I started out working as a data analyst in Bloomberg. Basically, I was getting all the data of Forex, of all the currencies and bond yield. So one fine day, I just wanted to know how did the traders get all this data, because I was compiling them and sending them, like making the average and sending to all the exporters, giving the data to all the exporters and all the IBMA association. Then I said, I really wanted to get the data. How did the data get? So the trader told me that you need to trade. So I went back doing internship, starting learning how to trade. Yeah. And then actually, while I was studying in university, my lecturer used to tell me, if you could make 1% a day, that would be great. I was like, 1% a day. Basically, in real life experience, you could not do it every day because you are human. But when I started trading, I realized that it's not that difficult. We are not talking about 1% a day, but you can actually, if you do it consistently, you can actually make profit almost every particular days if you are consistent, and you are disciplined enough. Yeah, that's the main rule of day trading. Yeah, sometimes there are some days that you make losses as well. Yeah.
So overall, how long, in terms of years, how long do you think you've been, getting that 1%?
Actually, I've been trading with as a trader. I've been trading for the past 14 years since the hamburger crisis. Yeah, I started back then. Yeah.
Okay.
So, yeah.
All right, Yosman. Thank you so much, ladies and gentlemen. 14 years. That's a long time. Okay, let's hear last but not least from Ronnie. Ronnie, what's your investing journey that you share?
Okay, so my name is Ronnie. So for your info, I have never had investment knowledge before. Okay, I've never learned anything about investment, not in capital market at all. And my investment journey, in fact, started after I finished my study, and in fact, doing my first job. Okay, so my first job was as a mechanical engineer for an oil and gas company. So it required me to mobilize the offshore platform almost every month. So there are times I need to be at offshore for 3 weeks to 1 month. Okay, so I was asking myself, how long am I going to do this? And am I going to travel to offshore until I retire? Or so while I was still at the job, I started to read about investment and then watch videos on investment. Then I felt like maybe this is the option for me to stop going offshore early and maybe can retire early, right? So I keep learning and started to open a CDS account and a trading account. Okay, so I went to a broker in my hometown walk in and open a trading account. So the rest history lah. So I purchased my first stock for. I actually purchased my first stock with only a little capital. In fact, actually 300 ringgit, and yeah, with my first stock, I actually managed to gain about 30% from that first stock. So at that time, finally, I already thought that I'm really good because first stock 30%, yeah, I think in just 2 weeks. So I started to deposit more money and buy more stock. So apparently, you know what happened after that? Market crashed badly due to the pandemic. So
Yeah.
but then I get to learn more based on the real experience. And now after taking the exam and get myself licensed, so now I'm a dealer at CGSMB Malaysia.
Wow, come a very long way, Ronnie.
Come a long way, yes.
Yeah. Okay. Great. Thank you so much, gentlemen. So for the listeners and viewers here, I think what we can take from this question, obviously, is that there's not one way to start, and it doesn't matter how long you've been doing it. Investing, trading is for everybody. So you don't have to worry whether you feel like, oh, maybe I'm too late to the game, and so on and so forth. Okay, great. A lot of different perspectives here today, and I love that. All right. Okay. So I think the next question I would like to go into is actually something the students have also wondered. Maybe for them to be a little bit more motivated, right? So the question is, how do you think your life has shaped, from starting your investing or vice versa and so on and so forth? I mean, was there any changes to you as an individual, maybe in terms of your lifestyle or your mentality and things like that? How did investing shape that? Maybe we can start off with Jospen.
Actually, it's a really good question. For me, investment, the trading really changed a lot of my perspective as well. I became when I started back then, I started analyzing because I started when it was the global meltdown, the financial crisis hamburger in 2008. So basically, you have to read a lot, and then I realized that about the economies, about the many factors affecting the stock price as well, because you see back then what all affect the stock price, because I was seeing the market collapse when I started, and then I see the market rebound as well when there was printing money, when the US was printing money and the whole world were enjoying the low interest rate. So the market kind of shoot. So the lifestyle, if I was not being, so basically lifestyle, I would say that it really changed my mindset. And I think this is one of the best things that I experienced doing, because if I was not being a trader, I think I would be in the corporate world or doing some business, but which I think is not that easy. And regarding the regarding the change, yes, I have built a lot of my career, because as a trader there's no career path, but it's just like how you increase the portfolio size, and then plus with the profit, yes, you try to maintain and invest, diversify, because you see different kind of stock, and then you realize that which one is good, which one is a bad stock. Yeah.
Okay, great. Thank you so much, Justin. Okay, what about Ronnie? Let's hear from you.
Yeah, to me, I think for me personally, nothing much changed before and after I start investing, because I'm a person who loves to read news. That is my daily routine. So before I sleep, I'll have to read news every night before I go to sleep. So that is before I started involved in investing. And when I started to invest, and I read even more. Okay, I read about news, what happens to the market, to the world, economics. So by what I can say here is the more you read, actually, what I mean is the more you read news, and then you get to know more what's going on in the market, economic, the global news. So actually, it helps a lot in your investment making decision lah. Okay, yeah. For example, currently there's a war, or there's anything related about oil price, so you know what stock to look at based on this kind of news.
All right, thanks so much, Ronnie. Okay, Benny, what about you?
Yeah, I think when I mentioned there'll be a lot of things that actually change the way I have lived in terms of getting that habit, right? But I just want to share three main ones. First one, being very disciplined. That has taught me that, the trading and investing has taught me that, whatever that we do, you have to have a lot of discipline in order to succeed. All right. Whether you're playing games or whether you want to raise a family or whether you want to do anything, it's all about having the right discipline. And that part in trading and investing has taught me that discipline is a very important tool. So it's not just investing, right? It's basically whatever that we do. So that has been ingrained with me right now. And also the discipline to do research, like what Yosman and also Ronnie was saying, right? If you're really serious into something, you really go and dive deep and really make sure that you know what you're doing when it comes to investing and trading. We can't be like halfway there and halfway there. It's like want to make things easy. It's not easy, right? You really need to go do a lot of research and so on. So I think discipline is one. Second one is also to be really humble, because I've experienced many times before when you start to have a lot of, especially if you have winning streaks in your trade, you think that you are God. And that's when you get smitten by the real God, right? So, so I've always been really have to be humble in the markets, right? Because we are always student of the market, and it's always continuous learning. So I will not think myself as a good trader whatsoever, because I'm still learning. But as long as we can make money, that's important. But keep humble. So that's the second one. The third one is basically having the right mindset, right? If whatever that we want to do, especially, for example, people always ask me how to be a good investor or how to be a good trader, for example, right? But I told them it's basically like you have the mentality of going to the gym and trying to lose weight, right? First of all, you probably go to YouTube or go to Google or search or whatever, how to lose weight, for example, right? And you get tons of YouTubes and videos and so on to learn. But that is just that theoretical part. And then you go get serious about it, and you're going to get a personal trainer, for example, the mentor, right? And he'll guide you and teach you and so on and so forth. So once you get the basics done, once you know what you're doing and the mentor has already teach you, then the third stage is the most difficult one, right? You have to really push through. Because if we don't, you can go to the gym and pay all this membership and all that, but if you don't have the determination to really lose weight for your health, then eventually, you'll not be able to succeed, right? Because it's continuous practice, apply, and that's how we get better. So that's the third part. So for me, it's that journey that if you want to do something, especially when it comes to investing and trading, is that how serious you are. Right, so treat it like going to a gym or even playing sports or anything that we do in life. So that has really taught me, right, a lot of things in my life experience as well. Yeah.
Well, thank you so much, Betty. Thank you so much, Yospo and Ronnie. I think this is actually a very important question to touch on, because especially for those who have not yet started investing, right? Although yes, the gains and the profit that you may or may not make is something most in front of you that you can get from starting to trade and investing, but a lot of these other traits and skills, research, being humble, and being dedicated, these are things that indirectly starts to churn into you, and it will not only just be for you when you're investing, but you'll actually start to apply these types of things in other aspects of your life and just succeeding overall. And I think I'm very happy with everyone's responses here, because I think when you watch movies like Wolf of Wall Street or whatever, you get very bad image of, not bad, but very hustler, aggressive, very tough kind of mentality. But in reality, it's a very, humble and down to earth things and more genuine traits that you get to learn. Thank you so much for sharing. I think that was very beneficial to all the listeners here. Okay, so now going into a little bit more in-depth stuff, right? So all the listeners or viewers here, they're students and they're youth, the youth community, right? So then usually with this community, they're probably not as exposed to, financial knowledge, or maybe lacking in some areas. And when it comes to investing, they may not have a ton of capital. They may even sometimes be using, their parents' money, right? So how can the students and the youth alike actually manage risk properly, especially during this time of a very kind of like a daunting market? Maybe we can start with Ronnie.
Yeah, during this kind of market, and let's focus on this investment challenge as well. as I see, because this period is take about like few months only, sorry. So actually, if you are looking to manage risk in the short term, okay, especially as a student or youth, the key is to be more cautious and conservative. Okay, perhaps you can look into these 3 points to consider for short-term risk management. The first one is on the focus on preserving your capital, okay, and having easy access to your capital. Okay, for example, in this game you have 100,000 US dollar. Then try to do diversification and then follow on all those requirements so that you know how to segregate your capital and ensure on this safety on your capital. Because I'm one of the operators, so that I can actually monitor on the performance of the participants, and then some participants even just all in one shot in one counter, and then they lost everything. Yeah, that's real. Okay. And then the second point here is I think you need to define your short-term goal and then the time frame, because this time frame is quite short. So understanding your objective will help you determine on how much risk you can afford to take in each individual stocks and in different market. Okay, like we have Malaysia, Indonesia, Singapore, and Thailand market in this challenge. So you know which market can grow your return better overall. Okay, last is on risk mitigation. Okay, let's say since if you choose to invest in the short term, perhaps you can consider low risk investment, like look into more stable stocks, okay, which is less more volatile. And please, to me, please avoid like super penny stock. Yeah, please avoid the super penny stock. I know that penny stock can give you a very high return if it's like there's a gain, but then the same thing goes vice versa. If the price drop like 1-2 bit, then you lose like a very huge. Yeah, so keep that in mind.
All right, thank you so much, Ronnie. Benny, what do you have to say about this?
Yeah, I guess everyone will have their own risk profile. But as a new investor, I will always advise to start small first, right? Because I did the same thing when I started just before in 1997 crash. I took I was just out of college, having the diploma. I was still in college at that point of time, but I had a fund actually to go to university. And trying to be smart, I took actually the university money to go and invest in the markets, and the crash came and lost everything, right? So start small. I think it's very important. I know that, some people think that, if I invest so small, I can only make this much, right? Why not just go all in? But I think investment and in trading even is a journey that everyone goes through. You need to keep on practice until you get it right. Because your risk really depends on how much knowledge you have when it comes to making investment decisions, right? So if you are able to practice this, and your risk will continue to go lower. And when you know that now that you are able to control your investments, or how to pick right stocks, or how to buy and sell, or even trading, then you can start to increase your investment capital. Because when you know that your risk is low and you know how to manage it, then you suppose, or you should be able to manage more, or having bigger position sizes, right? But if you are still starting, even if you have very, very good knowledge, or even you have a lot of money, I know some probably have very rich parents, I don't know, but even with money or no money, you have to start small. Because one thing I believe is that when it comes to investing or trading, we have to treat it like a game that we want to win, and not focus on the money. To give an example, right? Let's say if you are playing badminton, okay, I play badminton as well, right? So when you play badminton with your friends or whoever, even with, let's say, an opponent that you do not know, if you do not play and bet with money, right, then you'll be focusing on your techniques, your styles, and make sure that you play well. But the moment you put a bet on the table, that's when you start to get, I need to win back the game, I need to make that point, and you forget your strategy, you forget your plan, and that's what happens, right? So if the focus is on money, it's going to be very, very difficult. Same thing when it comes to investing and trading. focus on winning that game, right? Focus on having the right strategies, having the right plan, develop that, and then slowly, as we go, then you start to manage money. So start small and start increasing once you make profits, not when you lose money. All right, because I see also a lot of people, when they lose more money, they actually invest or trade even more to cover back their losses, right?
Yeah.
So it has to be the other way around. You have to make money first, that your strategy works, then only you add. Yeah.
All right. Thanks so much, Benny. Good analogy, by the way. I love a great analogy, and that was a really good one. Okay, Josper, what do you have to say about this?
Actually, I really like all the ideas that everybody shared. Actually, it's a good thing, and I would like to add like another few points. That is like I suggest the first-time trader should not use leverage, and you need to be disciplined. And remember, trade in your universe. Like basically, if you like a particular stock, just study the pattern, how it goes up, how it goes down, what are the buying strategy, like how do they buy the stocks, what kind of news the stock react to, and how they move. Once you know that pattern, you will know that you are playing you are trading based on what you know. So, and then you will have less chance of losing money. But remember, sometimes if you lose money, you need to cut losses early as well. And like every of the traders or the people who are recommended right now are saying, you have to be really disciplined. And I would like to add one few things. Like just now, I think the person before me really add a good point. Like if you play with money and you think that you want to win with money, then you will lose your focus. Basically, if you're trading, you trade on percentage, or like how I was taught is like, because I was doing day trading, I was taught like you trade with the coins, like how you play games. So every day you need to collect coins. You trade in the same pattern in such a way, then you increase your size little by little. Like if you think that today I need to come in and get this much money, you will end up losing that much money, or sometimes more than that as well. You will not get it. So that's the rule. And you only increase your size when you make money, not when you lose money. Yeah. So like how I was being taught, actually my mentor used to tell me like how you drive a car. If you're making a U-turn, you know that if you use this angle all the time, you will come in the exact lane that you will be. But if you miss or do certain type of steering wheel in a wrong way, the car will not come to the same lane. So that's when you lose your focus. So you need to focus on what you're doing. Yeah. So I would recommend you have your own universe. You don't have to know every stock in the market, but you just have your like 10, 15, or maybe 5 to 10 different sectors, but know that this is the leading indicator or leading sector in the particular industry. So, and then trade only on that stock. And I believe I want to add no penny stock. As a trader as well, I don't believe that you can make money from penny stock, because penny stock are the stock that will come take your money, not let you make money. Yeah.
Okay, great. Love the alignment, and again with the awesome analogy. I love it. Okay, so ladies and gentlemen, the ones watching here, I think to summarize a little bit, it's a lot about patience. It's a lot about consistency. It's about playing it safe, and don't try to get in a little bit over your head. Very great advice here, ladies and gentlemen. I hope you're jotting all this down with a pen and paper, because this type of information is not necessarily free out there in the real world, right? These are very valuable insights here. Okay, moving on to the next question. So this question is a little bit more, I would say, related to the ASEAN Investment Challenge itself, where the participants actually it's actually mandatory for them to make trades in the other markets. So for example, if you're in Malaysia, you can't just only trade Bursa, you actually do need to trade in the other markets as well. So the question here is actually, how does the investment landscape in Asia differ from other countries, and what unique challenges does this present for young investors? Maybe we can start with Benny, your take on this?
Yeah, thanks, Danny. I'll I think most of the markets in the Asian region are emerging markets, right? It's nothing compared to the more developed markets like the US or in Europe. So being emerging markets means there are plenty of opportunities, and emerging markets also mean a lot of volatility. And that's why a lot of traders actually like to trade the Malaysian markets or even the Asian markets, because there's a lot of volatility, right? And so I think at the moment, if we can focus in the Asian markets to look for the next big thing that's going to come out from Asia. I think right now China we're talking about Asia right now. Of course, we look at China as well. Of course, China is going to take the lead, and if an investor is able to find any opportunities that is aligned with China, I think that will be something, could be the next potential big thing in Asia itself. So I think, that's just one of the stories, but of course, there are a lot of other things that Asia can provide, which the developed markets can't. Of course, when it comes to technology, everybody looks at the US markets, right? But there's also a lot of other different tiers of technology companies in Asia itself. I think, for example, like Taiwan, you have SAMC, you have other companies that actually provide quite good components and all that to support the technology sector. Malaysia and Singapore, we do have companies that does that as well. We have companies that supports the EV industry. So I think investors really have to focus where the big trend is from the developed markets and see how the Asian markets can support whatever that's trending. So I think there's a lot of opportunity, especially when it comes to emerging markets, because we have still not a developed one yet. So until we get there, then things get stabilized. You probably won't have any much opportunities. So we are in a very good position, being in the Asian region, especially in the ASEAN region.
All right, thank you so much, Benny. Let's hear from Ronnie. Ronnie, what's your take?
Agree with Benny, because to me also, Asia is an emerging market. It's not developed, fully developed yet. So there's a lot of opportunity in Asian market. Okay, so to point out few key points on the unique characteristic and some challenges of the investment landscape in Asia for young investor, I can say the first one is on the diverse investment opportunity. Okay, I see that Asia offers a diverse investment opportunity due to its rapid economic growth and emerging markets, particularly in sectors like technology. And in Malaysia, I'm looking at the renewable energy right now, the green tech, okay, the green energies. Okay, and then on the second key points here is on the I think on the regulatory and cultural difference. So the young investors like all of you must navigate varying regulatory frameworks and cultures in different Asian countries, which can be sometimes complex and a bit unfamiliar to you. Okay, maybe you are familiar to the regulatory in your country, but maybe not others. Okay, so maybe you have to put a little bit more focus on that. Okay, on the foreign exchange risk, investing in Asian markets from outside the region expose you as investors to foreign exchange risk, and it provides you the to think of the strategies on how to manage the currency fluctuations. Even, for example, in ringgit right now, it's very fluctuating. Okay. And on the fourth point here is on digital investment platform. Okay, so Asia is a leading in fintech innovation. Okay, it makes a digital investment platform easily accessible to young investors like you. And while it is convenient, they come with a unique cybersecurity and privacy consideration. Okay, and the last one is on the geopolitical tensions. Okay, as all of you know, the ongoing geopolitical tension in some Asian regions can impact market stability and also investment decisions. So it requires young investors like you to stay informed about geopolitical risks. So as I highlight early on, you need to keep on reading news as frequent as possible so that you keep informed on what's going on in the market.
All right, very well informed there, Ronnie. Thank you so much. Yospoin, what's your take on this?
I would say that the investor needs to everybody needs to be alert, like for different kind of setup. Like for example, like we know, like Benny and Ronnie have already mentioned that like US is known for tech. Like Asian side, China is the manufacturing hub. Like all these EV supplies, EV cars right now that is booming in China. So basically, the Asian market has a role in the global market as well. Like for example, if you look at Indonesia market is the biggest for the coal prices, along with Australia, because as you know, there's a lot of coal listed companies in Indonesia as well. And there's a lot of growth potential in Indonesia as well. As you know that Indonesia is, the population is rising as well, comparing like following the pace of India. So basically you should look into that market as well. And so I would say that investor needs to be alert with all kind of market, and they can use different type of tools to hedge if they're investing as well. They can find like for example, Thailand, I would say the food industry, like we have some of the stocks that are the kitchen of the world listed, then they are the largest food manufacturers as well. So basically, sometimes you can see different kinds of stock in different markets as well. Yeah.
Okay, thank you so much, Yospen. Okay, so actually, I like that you talked a little bit on like industry specific, because I think the next question I would like the students here would actually like to know is, what industries or sectors are actually growing now, within your own countries. So Yospen, you mentioned a little bit just now on Thailand. Is there anything else maybe investors can be looking out for?
Okay, for Thailand, I think we are the food manufacturers. I would say that right now, most of the EV hubs are moving to Thailand and Malaysia as a manufacturing hub. The EV cars of China, we are talking about BYD, because as they are penetrating the market, they're using the hubs from this side. As you know that there are global conflicts with all this banning from different type of countries. So basically, right now in Thailand particularly, I would say tourism stock would be okay. As you know that we are a tourism-based countries, and the sectors that are going to come is the industrialists, where they sell land for all this manufacturing hub, as many of the manufacturing companies in China are moving to Thailand as well. So this is the shift in like the geopolitics. Like they use the Thailand as a manufacturing site to export to other countries in the world. So I would say these are the two industries that will be pushing and growing for Thai economies. I would say that we depend really a lot on tourism. Yeah.
All right. Thanks so much, Yospen. Okay, so same question maybe for Benny.
Yeah, so I guess I have to talk on the Singapore side.
Yes, you do. You do.
Yeah, I think one of if when it comes to investing in Singapore, Singapore stocks, when I look at it is not as volatile as Malaysian and Thailand stocks. I think particularly because the market participants are mostly institutions. There are still there's very very small percentage of retail investors in Singapore, and therefore you don't get really big price movements, right? But if you really don't go to investing in Singapore, of course, in Singapore being the Switzerland of Asia, it's an Asian financial hub. Now that Hong Kong has probably been taken off that title, so one of the main sector that investors should look at in Singapore is of course the finance sector, right? Because being that financial hub in Asia itself. They have been providing, these are all stable stocks. Who have not heard of DBS and OCBC and HSBC and OCBC and so on, right? But they provide good dividends. But remember, I said their stocks are not volatile, so it's not really for trading, right? It's more for long-term investments. And of course, apart from that, I think today after the pandemic, tourism has come up. I think the same thing that happens in Malaysia and also Thailand, right? The number of passenger movements in airports have gone back to pre-pandemic levels. So we are seeing a lot of tourists, and being in Singapore, they don't attract poor tourists, they attract mostly rich tourists. I mean, Malaysians like us, even now to go Singapore is like historical high, right? So,
Yeah,
people to go Thailand now. So your spun, maybe I can
Yes.
one day.
yes, true. Love those beaches.
Yeah, so Singapore is expensive, but you can see the number of people coming to Singapore has increased as well. So I think after the pandemic, you should be also looking at the tourism and hospitality sector. And bear in mind that in Singapore, there are quite a number of REITs which are quite unique in the sense that not all the REITs in Singapore are have properties in Singapore only, but they also have international REITs. And they also have data centers and things like, not available in Malaysia. So I think in terms of like what Yosman and Ronnie said earlier, diversification is important. It's important to also look at, if I'm a Malaysian, I invest in Malaysian stocks, or if I'm in Thailand, I invest in Thailand stocks. You should also look at the uniqueness of the other countries and see what it can provide, right? Like Yosman was saying about the tourism sector and the food company. Of course, in Singapore now, they have also, the exchange has come up with SDRs, or Singapore depository receipts, where they can trade 3 Thailand stocks, the main ones, right? You can invest in the airports, you can invest in CP, which is one of the biggest retail company, and then you can also invest in PTTEP, which is an all exploration company. So that gives Singaporean an alternative to invest outside that, which is not available in Singapore, but it's available in other countries like Malaysia and also Thailand. So tourism, banks in Singapore, and I think the last thing will be definitely commodities lah. Because commodities prices are still quite high, and you can see today itself, everybody's talking about oil prices is going up. And now being and one of the things that I think a lot of investors need to also look at is, some trends are cyclical. They are not trends don't last forever, right? There's always a boom, there's always a bust, and it comes back. I think you need to look at which sector is booming and which sector is not at the moment, so that we just go in short term. For example, like commodities normally is bullish towards the end of the year or the last quarter of the year, because people need more fuel for the winter, and you need more oil for the winter, and so on and so forth, and for festive seasons and all that. So commodities is another thing that investors should also look at. And being in Singapore, there's of course companies like plantation companies, big ones like Vilma, and so on and so forth, right? So yeah, I think these are the 3 sectors currently trending in, I think not just in Singapore, but probably in the Asian region itself.
Thank you so much, Benny. That was very, very jam-packed with information, and pretty sure the viewers right now love that. Okay, Ronnie, what about Malaysia's side?
Okay, so for Malaysia's side, I would like to highlight on the recent policy that they just rolled out by our Manadi government. Okay, so the government recently launched the NETR, National Energy Transition Roadmap. Okay, so this outlines Malaysia's efforts towards achieving a sustainable and inclusive energy system. Okay, so it consists of 2 parts. Okay, so the first part of this NETR has identified 10 flagship catalyst projects based on 6 energy transition levels, which consists of the energy efficiency, renewable energy, hydrogen, bioenergy, green mobility, and carbon capture, utilization, and storage. Okay, so this focus on the direction towards sustainability and also the green energy in Malaysia. Okay, so the second part of NETR, introduce the responsible transition targets and expand on 2 critical parts, which are the energy transition ambition and micro position, and also the 5 cost-cutting enablers. Okay, so I see that NETR is crucial in navigating the complexity of the energy transition on the large scale. It is not easy to transition between the traditional electrical usage to green energy, especially on the shift from as I mentioned, to the shift from a traditional fossil fuel based economy to a high value green economy. Okay, so on the second policy that has been rolled out by our government, Malaysia government, is a new industrial Malaysia plan, new industrial master plan. We call it as NIMP 2030. Okay, so what is this NIP 2030? It is a 7-year industrial policy to spearhead manufacturing and its related services sectors. Okay. So this it will provide national strategic direction for industrial development and reference on Malaysia's position and direction, as well as the role of the Malaysian government in shaping the economy. Okay, so some of the key macroeconomic target outlines under NIMB 2030. The first one is to increase the value added of the manufacturing sector by 61% to RM 587.5 billion, okay, by 2030. So in 7 years, this is the target of our government, okay, to increase the value added of manufacturing sector by 61%. Okay, the second one is to grow the employment by 20%, which is to 3.3 persons by 2030. Okay, in 2022, the employment rate is numbers is at 2.7 million persons. Okay, and the last one under NIMP 2030 is to grow the median salary by 128% to RM 4,510 in 2030. Whether we can achieve this or not, Leah, I think let's wait by until 2030. But I believe that the current government will do a lot of initiatives so that we can achieve all these targets.
All right, thank you so much, Ronnie. Again, another one with the jam-packed information. So I hope everyone here, you caught that. Okay, so now let's move on to the, I'll open up the floor now to the crowd to submit their questions that they would like to ask specifically. So we've actually been getting questions coming in already. So I've been taking a look, and I'm just gonna nitpick some of the ones that I think are beneficial. And I will open it up to, maybe I'll direct it to some, and for others, maybe I'll just open it up to everyone. So actually the first question is very, very, very important question, I think. It's what are your thoughts on technical analysis? Benny, do you have any thoughts on this?
I started off with technical analysis. I think it's the most simpler analysis to learn. But again, technical analysis, if you are trading short term, then you will not care about the fundamentals, right? Because if you are trading intraday, for example, then I really do not care what's the fundamental of the instrument that I'm investing or trading. But if I'm investing, then of course fundamentals takes more importance than technical, because technical is all about timing your trades, right? So even if I'm an investor, I also use a little bit of technicals, because you know what stocks that you want to buy when it comes to fundamentals. That's what stocks, right? And you also need to know when. So technical will help me to get in that when part, right? So if you combine together, that would be the best. So again, depends on your objective, right? If you're really trading short term, then of course your focus will always be using technical analysis, because price matters, right? When it comes to trading. So technical analysis is basically the analysis of price movements. That's all. So if you're able to master that, you do the short term trading, yes. But when it comes to investing, you still have to look at the fundamentals part. Yeah.
All right, thank you so much. Anything else anyone would like to add? Jospen or Ronnie, would you like to add?
I definitely agree with what he said. Like when he said that, yes, you need technical for short term. Sometimes you don't know where to enter, if the stock is oversold. But in the long term, when you invest, you need fundamental, because that is what going to indicate how the stock gonna react. Yeah.
Okay, all right. Thanks so much, Jospen. Okay, so I'm seeing some very interesting questions as well here. But I guess in the interest of time, I will be combining it. So there's actually something that a viewer asked. But if you will allow me, I'm actually gonna just change it up a little bit, right? So the question is actually, will the financial world in the upcoming years be rocked heavily by political affairs and many growing political and geopolitical factors? I think yes. I think there are always going to be things arising when it comes to geopolitical matters or political affairs or just general world news, right? I mean, in the past couple of years, we've seen quite a lot of moving events, starting from COVID all the way up to the Ukraine war, and currently now in the Middle East. So I think I would like to ask our speakers here, knowing all that, and especially now recently with it happening more frequently, how can an investor, what's the mindset of an investor right now should they be scared, should they be worried, and how can they adjust themselves to make sure that they're always ready to face any of these types of ongoing issues? anyone here would like to take just unmute and yeah. But I see Benny has unmuted himself.
I can take that if you want, but
sure.
well, I think one of the things that we can do to mitigate risk is to have a proper portfolio in your investment, right? So we have to look. I mean, things like this happen. It happens. I mean, if you talk about 50 years ago, 100 years ago, we always have political tensions. We always have these things that which is uncontrollable. And if we continue to focus on that, we will never find any opportunities, right? Because I think one of the things that a good investor will do is in any crisis, you should be looking for opportunities. Because any crisis, even the pandemic, there were opportunities, right? Because if you have bought glove companies, provided that you know how to get up when it's high, then of course you can make money. But there's always opportunities, right? Whatever situation there is, Ukraine, Russia war, oil prices go up, you should be looking at all companies, right? I mean, there's always opportunity. So I think that's a focus. But really, when it comes to risk mitigation, it's always to have a good portfolio. I mean, Equity Tracker, we are also a fund manager. One of the subsidiaries is really a fund manager. So our focus is always building that portfolio, right? As for example, if I want to have, for example, a portfolio that's steady, I'll probably want to look for companies that's not going to be affected by economic booms or whether there's war or whatsoever. For example, like consumer products, right? Because no matter what happens, people still have to consume, they have to eat, they still have to buy their Milo and Nescafe or whatever in the gimme. They still have to eat, right? So those if you have those kind of stocks in your portfolio, at least that will be a pillar. Then you can look for other sectors to put into portfolio so that you have a different mix, right? So again, don't just focus on the problems, but build a portfolio, a balanced portfolio where you have some really good rock steady stocks that is not going to be affected by most of economic or even political changes. And you may want to take a little bit risk, but very small percentage in your portfolio on very growth stocks or cyclical companies and so on and so forth. Yeah, that's one way of how to mitigate the risk.
All right, thanks so much, Benny. Ronnie, do you have anything to add, or maybe Yosef, would you like to add on anything to that?
I would say that with all this tension, I think, yes, like some of the companies, for example, if you like, okay, we are not supporting any kind of violence or anything, but like, for example, like you can look for the stock that sell arms, weapons sometimes, in this situation, or maybe like, okay, that with the global geopolitics right now, you can look for opportunities like maybe safe haven stock, like some dividend stock, like some of the stocks pays really good dividends. So all this stock, if you notice, even though the market come down a lot, sometimes it doesn't come down at all. So sometimes you can park your money inside that, or maybe you can look for opportunity, different asset classes. Like for example, right now it's like the gold is going up with all this geopolitics, oil price is going up. You can move your money there because you'll be able to notice that the smart money is moving, it's going in that direction. So there is opportunity all the time.
Okay, thanks so much, Yosef. All right, so next question is actually something a little bit more calm now, a little bit, I think, but then generally, I think people want to know is, what is the best instruments to invest in when starting with small capital? Or is there any investment strategies or products that are actually more suitable for young investors who don't have that much capital? I think for this one, I'd like to get a take from everyone. So maybe we can start with Ronnie.
Okay, again, I think the best instrument to invest in when starting with small capital, okay? I believe all of us here also started with small capital. I've already mentioned that my first stock that I bought with very small capital, also I can manage to gain 30%. Okay, so to me, if you have small capital, you can start with stocks. Okay, you can start with ETF and also REITs. Okay, so ETF and REITs something that is the kind of instrument that you can buy and keep on collect for long period. Okay, and then same goes for stocks. If you have small capital, you can use the dollar cost averaging strategy, okay, by collecting high dividend yield stocks which can give you high dividend for long run. I will always look into stocks.
All right. Any other views from Benny or Yosef on this?
I would say that I agree that even I started with a very small portfolio and I trade big caps. So basically I would still go back to my same principle, because the genuine idea with like would be like people will recommend, if you look at YouTube or whatever, that they will recommend first thing is invest in trading like futures derivative, but I would say that is leverage. So basically sometimes you lose all your capital. So I would still go back to what I said, that you trade the stock that you know, even with the small size, and trade until you know that you can increase the size. Because all this stock, if you know the pattern, you study them really well, it will be very, very difficult that you will lose in the long run, means that you will not make money. So because if you know how, if you're trading, like for example, Thai stocks, I would say big cap stock, we are trading with foreigners, institution, and local investors. So basically you have to read their mind. It's like, I would say the best skills would be like how you play poker, because when they place bid and offers in Thailand, like in the stock market, you can have a sense to a direction that the stock price is going to go in this direction, and who is buying. If there's buying big lots or like big buy orders, then you can follow with the trend. But remember, I would still say that you trade small size with the stocks in the stock market, and then as you collect more coins, then you increase your coins. Yeah.
All right. Thanks so much, Jocelyn. Benny?
Yeah, I guess one of the things that a lot of traders, investors, when they start out, is that they're being very impatient. They want to make money as fast as possible, as much as possible, right? I think it's good to have that, because you really want to make that money, but you can't look at a big figure, right? I want to make let's say 100% returns a year, but can we make it consistently? Because even the best investor like Warren Buffett is only able to return about 20% CAGR over the past 40 years. So if you are looking at investing and want to beat Warren Buffett and you say you can make 50%, I think you're a legend right now, right? So I think investors have to be really realistic, especially the new ones. It's not impossible to make a lot of money. I mean, we have really traders who have done and make really good money and retired early as well, right? It's not like Warren Buffett until now. He could have retired earlier, but he's still doing it. And just what he does, right? And what he likes to do. But I think for investors is take your time. It doesn't really, if you ask me what instruments and all, it doesn't really matter, right? Because at the end, it's about how you manage your money. For example, and you know what, if you start small, that's the best and that's the easiest to trade, right? Because as you picked up, for example, if you start with 1,000 ringgit, the max you can lose is 1,000 ringgit, right? If like, for example, if I have 1 million ringgit, I'm not going to lose that 1 million ringgit. I can't take the risk that the 1,000 guys can take, right? So it's good to start that small, but it's all about money management. So it doesn't matter what instrument that you are trading, but make sure that the cost of trading is low. Because in Malaysia, for example, even in Singapore, you have to buy 100 shares per lot, right? And if you buy, let's say $100 or 100 ringgit, your commission is going to be like 8% or 7%. It's going to be crazy. And that's why you probably want to look at futures where you get leverage and all that. So no matter what instrument they're investing, the important thing is this, right? It all boils down to money management. It boils down to position sizing. Just to give you a very simple example. Now, if let's say I have $1,000, right? And if I risk every time when I trade, I risk 10% of it. I'm going to risk $100 each until I finish 1,000 after 10 trades, right? So if I lose 10 trades, I'm going to lose everything. But if I'm just going to, let's say, risk 2% of that 1,000, which means I'm just going to risk 20 ringgit every time when I trade, I have 50 times of consecutive losing trades before I lose all my money. So I think whatever instrument that we're trading, managing money or your position size is very, very important. So like I said, start small first. And Jocelyn has mentioned as well, as we make money, then we increase that position size. Yeah. So be patient, take one step at a time.
All right. Thanks so much, Benny. That's great advice. Okay, ladies and gentlemen, we are in the interest of time. I would like to take one last question for all the speakers here today and have it be kind of the cherry on top of the cake for everyone to take away, right? Gentlemen, with all your years and experience in trading and investing, what would you say is your biggest takeaway from all of your experience here? Maybe we can start with Ronnie.
My biggest takeaway.
Yeah.
Again, start small, okay, and I believe that you need to have a guru, actually, your mentor, not guru, but mentor, but someone that can always a mentor is someone experienced to teach or guide you on the basic first step into investing or trading. Okay, this is due to the mentors have already gone through the ups and downs and have lots of experience. So if he or she is willing to teach you, you're actually saving up your time. Okay, so compared to me last time previously, with my experience, I didn't have mentor back then. All my mentors are just YouTube videos and also articles. So my guru or my mentors are actually my personal experience. So yeah, it's really good if you have a mentor that can handhold your investment journey. Yeah.
Oh, it's okay, Ronnie. I mean, people have learned rocket science and stuff from YouTube, so that's more than okay. All right, thanks so much, Ronnie. Benny, what about you?
Yeah, I think after trading for and investing for quite a number of years, I think at least 20 years, one of the things that every investor and trader must have is a blueprint, which is for traders is a trading plan, right? You know what to use, you know the setups that you use to buy and exit, and you need to have this plan, and this plan has to come in before you start trading. You can't be planning a trade when the market is already open, and you will not be able to make that kind of decision. But the trend has to be consistent, and you need to have the discipline to continue to follow the plan. I know sometimes it's very difficult because we can sometimes get diverted when we have news. Suddenly, I maybe get a call from Danny. He said, "Hey, you know what? There's a good stock to buy," and then I get diverted. Ronnie says, "Go and bang on oil." We get distracted sometimes, but I find out that most of the times, you normally lose money when there's a distraction. So the focus on having that trading plan is very, very important. So whether you are a trader or investor, even in investing, you have your own setups, right? Your own criteria to what kind of criteria, what kind of indicators that you look before you start investing and or before you start trading. So having that trading plan is a must. I'm not sure whether Yospan and Ronnie will agree, but every trader must have that trading plan and the discipline to follow that trading plan.
Wonderful golden advice. Thanks so much, Benny. Last but not least, Yospan, what's your biggest takeaway?
I would say that you have to be really disciplined. You need to study, like you need to jot down every day what happened. You need to have your trading journals. Like even if you are making money, you are losing money, at least you can recall back. So even if it's a good day or a bad day, you need to write it down and remember, how did you win on your good day and how did you lose on your bad day? So it will make you realize what went wrong and what you have to go back to correct it. And remember that market is never wrong. It's just the decision that you make at that moment. It's what make you lose money. Yeah. So adding to everybody have been saying, giving all the good points. So I would like to add this as well. Yeah. So I would say that, yes, you need a mentor. Sometimes as a trader, you need somebody to talk to, because with the market, because it's very volatile. Sometimes you make so much money. You need to like share your good points or your profit to somebody else as well. Like tell them that, okay, today you made money. And even if on your bad day, you have to let it go. Like talk to somebody, explain them why, explain what you would have written down in your trading journal as well. That, okay, what went wrong? Why did I do this? And remember, you have to accept your mistake. If you cannot accept your mistake, it means that you're blaming something else. You're not blaming yourself. Yeah. Because if you study or doing everything according to the system that you set up already, sometimes it means your system is wrong. You need to go back to correct it, but it's not the market that is wrong. The market is always right. Yeah.
All right. Thank you so much, Yospan, for that. That was great advice. Okay, ladies and gentlemen, we have come to the end of our Ask Me Anything session number 2. I would like to thank everyone for tuning in, and most importantly, I would like to thank Ronnie, Benny, and Yospan. Thank you so much, guys. You guys have given some really great advice that I think, again, I want to reiterate. You cannot expect to get this kind of information and insights for free outside. This is actually very, very valuable. So I hope the ones there listening on the other side, you guys are, taking down the notes and everything. And be sure, just do me this one favor. I'm pretty sure you guys have learned a lot from today's session. So whenever you are sharing these information with your friends, please give credit to who gave the advice from here today, that's just for good faith and good measure. But please do use them and utilize them. Again, thank you so much, Yosman, Benny, and Ronnie, and thank you to all the viewers. Thank you for dialing in, and have a good weekend. I will now end the call here. Goodbye.